Broadcast is now starting. All attendees are in listen-only mode.
Okay, good afternoon, everybody. How are we doing today? If I could just get a quick audio and video check from you. If you can just type in the questions box there, let me know that we're coming through loud and clear, that you can hear me, and that you can see my screen. So I'm going to make sure we're up and running here so we can move forward. All right, Charlie, David, Kent, everybody, Jonathan, thank you very much. I appreciate that. So I appreciate everybody joining us here today on this Thursday afternoon. Hope you've had a good trading day and a good trading week, man. We've had some great moves with the market, and we've had a lot of great opportunities for Nadex Binaries and Nadex spreads. And a lot of our guys have been totally rocking it this week on trading out of the money Nadex Binaries. And that's what we're going to talk a little bit about today. And just more talk about some of the basics here of, you know, kind of some do's and don'ts when it comes to out of the money binaries. Out of the money binaries can be, you know, an extremely great, you know, risk to reward product if they're used properly. And, but they can also, you know, when used improperly, not quite give you the result you're looking for there. So we're going to chat about that a little bit today. So let's move forward and let's knock out our disclosures here. As always, trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. And the information here in this webinar is for informational and educational purposes only, and past performance is not indicative of future results. Also, guys, keep in mind, if I show you the Nadex platform today and, you know, the demo platform, and I open up a ticket and I enter an order, that's in no way, you know, trading advice by any means. That's just simply me trying to help you visualize what it is I'm teaching you today, and, you know, helping you understand how to use the Nadex platform and use the order entry form there. So my name is John Skelton. I'm with apexinvesting.com. And Apex and Nadex, two complete different separate companies. Nadex is an exchange. Apex, we're an online education company. We've got over 20,000 members. You know, we've got live trade rooms and trading systems and indicators. And, you know, we're a group of traders helping traders. We're traders just like you. We do these education webinars for Nadex. You know, we trade binaries and spreads every day ourselves. And we're just here to help give you some free education, to educate you on who and what is Nadex, you know, how do binaries and spreads work, what are some ways you could trade them. And something I really have to give, you know, Nadex credit for is they give their members a lot of free tools and a lot of free education. And if you're not familiar with all that, let's just hop on over real quick here to nadex.com. And, you know, you can go through these tabs here. Basically, Nadex offers two different products. They offer binary options and spread options. And you can get some information here about those. Here under market news, you know, some great videos every day or two here about, you know, what's going on with the market, maybe give you, you know, some insight to formulate some trading plans for yourself there. Here under the Learning Center, all kind of educational courses. If you go right here to webinars, this will show you the upcoming webinars in the future that you can get signed up for and registered for. If you've missed any of the past webinars, or, you know, maybe today is one of your first times on a webinar and some of what I'm talking about might be a little over your head because you're still trying to understand, hey, what is a binary? Just go here to Webinar Archive, right here, filter by presenter. Just click down and find us right here, Apex Investing Institute, okay? And you can go through here, and this is where all the webinar recordings are placed. This is where today's recording will be placed. And, you know, we kind of cycle back through. You know, we start, you know, we've got some webinars in here about, you know, do you know the basics of Nadex spreads? If you go back to page 2, I think, let's see here, you know, we've got the basics of binaries, you know, right? Let's see here. So I've gotten here some basic of binaries, back to the basic. This is where I just kind of hold your hand and walk you through like a 5-year-old, as it were. This is a binary. This is how it works, you know, and take you through it. And then from there, you know, we kind of build on top mistakes that binary traders make, short term, you know, how to use the strike ladder. Then we go through and, you know, we talk about different strategies, different systems. So it kind of starts from the foundation up to advanced, and you've got a whole library archive here of some great information. Under trading platforms, you can go straight to the online trading platform. Nadex has a great mobile app for your Android smartphone. Right here, demo trading platform. If you don't have one of these, get one of these right now. Sign up for it right now while we're on the webinar. Nadex will give you a free $25,000 simulated demo account. Okay. All you got to do is fill out some quick information and hit enter. In a few moments, you'll get a temporary password from Nadex, and you can use that and log right into their demo platform. Okay, it's a great place to get familiar with the Nadex platform, get familiar with the different products they offer, the different instruments and expirations, entering and exiting orders. And it is a great place. I cannot stress this enough. Okay, one of the biggest mistakes new Nadex traders make, whether you're trading binaries or spreads, is you think you've got a good handle on what they are and you just go in and just start trading your live money. Okay, that is a very expensive way to learn and educate yourself. Okay, you've got all these free education tools. Use your demo account. When you're figuring out a new strategy or system, test it in your demo account. Make your mistakes in your demo account, right? Learn it, master it in your demo account, be profitable in your demo account, then switch over to live, right? And then once you've got that mastered in live and you want to add on a new strategy, maybe you start with a trending strategy, and once you're mastering that in live, then you would add on a range-bound strategy. Well, you start practicing that in demo, work out the kinks, move it over. Do it smart, do it the right way. Nadex provides you all the tools to do that with some great education, free tools, and a demo account. Okay, so make sure to check that out. So again, my name is John Skelton. I've been with Apex Investing now for about 4 years as head of operations. I've got a background in banking and as a licensed stockbroker. Got 15 years experience in the industry, and I'm an educator and trader just like you. Okay, so that's what we're here for, is to give you some free education and some ideas on how you can trade the Nadex products. So today we're going to this is going to be pretty short, but it's going to kind of cover the basics and some do's and don'ts and kind of help you, see some things that you want to look out for. But we're going to talk about what is an out of the money binary. OTM stands for out of the money. We'll talk about some of the pros and cons, when to trade them, when not to. We'll talk a little bit about some out of the money strategies. So first of all, let's look at a Nadex strike ladder just real quick here. Okay, just a real quick review for some of you. You may know this forwards and backwards, but again, for some of you might be new here. So let's just let's pull up some forex binaries here. Or well, no, let me just check something here. Let's pull up some of these right here. Let's go to small caps. And what do we have at 2 o'clock here? The market's been kind of moving today. Yep, we need to go further out. All right, so this right here is what's called the Nadex strike ladder. Each one of these different strikes, 55.4, 0.0, 0.6, each one of these different strikes is a binary contract, each one of these, okay? All a binary contract is a statement. The statement says the U.S. Small Cap 2000 will expire greater than 1547.0 at 3 p.m. That's it. Either it's binary, right? 0 or 1, true or false, yes or no. This statement either will or will not happen, okay? And when you're trading a binary, you're choosing which strike you want to agree with that statement on or disagree with that statement on. For example, if I think, yes, my charts, indicator, strategy, or system, I believe that small cap will be greater than 1544.2. So I want to buy that because I agree with that statement. If I say, nope, I think it'll be less than that, then I want to sell it, okay? And at expiration, a binary is either worth 0 or 100. So the difference of where I buy or sell compared to 0 or 100 is my potential loss or potential profit, okay? If you need to go back and check out some of the basic videos where we really jump into that a little more, you can. For this example right here, the offer side, this is the price I can buy for. The bid side, this is the price I can sell for. So just to keep it simple, let's look at the offer side. So for example, if I was to click this one right here, it'll open up a ticket. If I was to buy size right here, 1 contract, okay, it tells me My maximum loss is $58.50. Maximum profit would be $41.50. If I add these two together, what does that come to? It's $100, okay? Because the most a binary can be worth at expiration at 3 o'clock is $100. So if I bought it for $58.50 and it expires true or in the money, then it's worth $100. If I buy it for $58.50 and the market expires lower than this, then it's worth $0. Okay? Now that's at expiration. I can exit early, whether I'm, being profitable or whether I'm, the market's going against me and I'm in a loss. I can exit early. I don't have to hold till expiration. Okay? And the strike ladder here gives you a pretty good idea of, how the market moves. Like, for example, right here, this strike is 1545.6. This one is 1544.2. Okay, so there's 14 ticks difference between these two strikes, right? So if I was to buy this binary right here, okay, and let's say the market went up 14 ticks. Well, that means that this binary right here, after the market went up 14 ticks, would be priced the way this binary is right now. And this binary here, after the market goes up another 14 ticks, would be priced the way this one is right now. Does that make sense? Okay. Ernest says, in what order are these sorted? Well, they're sorted by the strike price. Notice here that the strike prices up here just work their way down. Okay. So these are the strike prices. Okay. These expire at 3 p.m., which means these opened up at 1 p.m. Okay, because there's 2 hours to expiration on these. All right, so basically when these opened up at 1 p.m., Ernest, the market was basically right here in the middle. Okay, so basically right at 1 p.m., the market was basically right here, about 1547. So that was the midpoint, and they put, 1, 2, 3, 4, 5, 6 up and 6 down, basically. Okay, or 7 up and 7 down. Does that make sense? So when it opens up at right before 1 o'clock, when these new binaries are about to come out, like they'll open at 1, okay, see right here, 1 p.m. to 3 p.m. So right before 1 p.m., okay, like at 12:58, Ernest, wherever the market was at right there at that time, that's kind of that's how the middle strike is determined. Right, here's the market now, so let's put a strike there, and then let's put, X strikes above it, X strikes below it. They're not just randomly made to be in your favor or against your favor, or is the market going up or is the market going down. Wherever the market is at the time they open, that's the middle strike. And then there's X numbers above it, X number below it, equal strike difference between them. Does that make sense, Ernest? How that works? Okay. So then, based on the strike, the number of the strike, then you can see what they're priced at. Okay. And you can see here, down here, like on the buy side, for example, these are priced closer to what? 0. Down here, they're priced closer to 100. And then everything in the middle. Okay. So does that kind of make sense? A little more sense? It's not as random, like what is all this information? So this is the contract and the strike price. This tells you right here, time left, how much time left to expiration, the date of expiration. This is the bid size, meaning how many contracts are available to be sold at that price. How many contracts are available to be sold at, or to be bought at this price. And this shows you, the update. Okay. The indicative price, that's where the market currently is. That's where the Nadex indicative is. Okay. So real quick, and we've talked about this before. This is, again, elementary for some of you guys, but for any of you that are new, it's very important to see this. Because right now you're looking at this and you're like, okay, to me, this just looks like a lot, right? Like, okay. Let me help you simplify this real quick in your head. This strike right here, what does this contract say? The small cap would be greater than 1542.8 at 3 p.m., right? So what do we know? At 3 p.m., at expiration, this contract will either be worth 0 or 100, correct? Okay, 1542.8. Where is the market right now? 1542.4. The market price right now is very close to this strike price, isn't it? So if it went up a little bit, it'd be worth 100. If I bought it and it went up a little bit, at expiration, expired worth 100, right? If I bought it and went down a little bit, it'd be worth 0. So it's kind of right on the fence right now, isn't it? And therefore, where is it priced at around? Right in the middle, about 50 bucks. Can everybody see that? Does that make sense? That's what we call an at the money binary, because right now that binary strike price is right around where the current market is, so it's priced right in the middle, right? Between 0 and 100. Why is this one up here priced at $91? Well, because the statement says that the market will be greater than 1538.6. Well, the market's already greater. It's at 1542.3. So this is already a true statement as of right now. So as long as the market stays up there or goes up, or even if it comes down but doesn't quite come down to here, so this is a higher probability of happening based on the pricing because it's already happening. So that's why it's priced closer to 100. Okay? That makes sense why these are priced higher, because the statement's already true. So as long as it remains true. Okay? What about these that are priced under 50? These are what we call out of the money binaries. I mean, look at these. I mean, some of these way down here, I mean, I can buy this one for, $11.50. Risking $11.50, if it expires in the money, I can make $88.50. Wow, I like that, right? Okay, well, but what is this statement saying? That the market will be greater than 1555.4. 1555. Right now it's only at 1542. So for this to expire in the money, what has to happen? The market has to go up, 130 ticks. So the market has to move 130 ticks, it has to move up 130 ticks, and it has to move up 130 ticks within an hour and 43 minutes. So you can see that's a little less probability of happening unless you've got something telling you that the market's going that direction, right? Basically, when you look at the price of binaries, okay, if you look at the offer side and the bid side, and you look kind of right in the middle, like 48 to 50, or 47 to 55, about 51 is kind of right in the middle, right? Well, and you can look at that as a probability, okay, just based on the pricing model. It has nothing to do with what's going on the chart or the market direction or changing direction, but just where the market is right now, the pricing of the binaries is priced based on the probability, okay? So, when you're up here and you've got a binary that's, got a probability of around, 71, 72, okay, granted, now it's a higher risk, but it's a 70-something% probability just based on pricing. What kind of probability do you have on something like this? Like 7% just based on price, okay? So here's the biggest mistake that people make. All right, first of all, does that help you understand this price ladder a little bit? When you pull one of these up, instead of being overwhelmed, when you pull one of these up, immediately find the area that's around 50, and you'll know that's about where the market is. And just draw an imaginary line right there in your head, going, there's the middle at the money. All these are in the money, all these are out of the money. Okay, like just find 50 and draw a line right in the middle and separate out in your head out of the money above, in the money below, or the opposite on the sell side. Okay, so if you're brand new to binaries and you're really not understanding how they work, okay, in fact, I just want to show you something real quick. What is this? Where's this strike price at right here? 1555.4. Okay, let's pull up a chart. Okay, where's the market at right now? It's right here. 1555. I have to squeeze my chart just to find it. It's way up here. See that? Okay. So what do you have that's kind of going to tell you that there's any reason you would want to buy that strike way up here? Okay, I mean, because the market's got to move, a lot, 140 something points to get up there. And so unless you've got something on your chart, your strategy or system telling you that, hey, we think, the system's telling me the market's going to go up and that it's going to go up with some force and strength, therefore it might get up there in time. But if you have nothing that's telling you that, if you have no reason to think that, why would you ever buy this binary? Well, John, because I can risk $7 and, hey, maybe I'll make $90. Well, that is the biggest mistake people make with out of the money binaries, is they randomly take them due to the risk reward that they see right here. They're not trading, they're not looking at a chart, they're not using a strategy or system. They don't have a reason behind trading this particular instrument. They're just randomly taking it because, well, hey, I can spend this much and maybe make this. Kind of like when I go to the store and buy a lottery ticket. I could spend $1 or $2 and maybe I'll make this. Or, when I'm at the tables in Vegas, well, I'll just throw this out. I mean, roll the dice, maybe. If you're taking these just because you like this risk reward and you're not looking at a chart and a system, answer this. Are you trading or are you just gambling? What does it sound like to you? Yeah, without having a rhyme or reason behind it, you're not trading. Okay, yeah. Ernest says it's worse than gambling. It really is. I mean, you're just throwing your money away, right? I mean, if you just want to gamble and throw money out there, go to Vegas, have some fun with it, get some free drinks while you're losing your money, right? I mean, I say that all the time, but it's true. Okay? So I'm not trying to tell you that out of the money binaries are bad, because we trade them every day. But I mean, any instrument you trade that you just randomly trade it without a reason behind it is bad. Okay? There are times and places to use these. Okay? Now, let's say that my strategy or system did tell me that the market was going up. Okay? Well, let's think about something here. Let's say that this chart turned around on me and gave me a reason for it to go up. Well, it's got to go up quite a bit, and it's got to go up quite a bit by 3 o'clock, and then it's got to stay above that level by 3 o'clock for this strike to expire in the money worth $100. Correct? Everybody follow? Because for this to be worth 100, it's got to be greater than that at 3 o'clock. So, that's saying a lot, right? I have to know quite a bit. I mean, even if my chart is telling me the market's going up, how do I know it's going to go up that much or stay up that much? That's a long time for me to hold on to that, right? Okay, well, here's another big mistake that people make with out of the money binaries is they're not looking at them properly. Okay, you can hold a binary all the way to expiration, and let it expire worth 0 or 100. Okay? But let's take a look at something. We talked about if I bought this binary right here for $18 and the market went up 14 ticks, well, then it means that that binary is now 14 ticks higher in the money, right? It's not in the money yet, but it's 14 ticks higher, which means it would be priced then the way this one below it's priced, because this one below it was already 14 ticks higher, right? So what if the market moved another 14 ticks, and then another 14 ticks, and another 14 ticks, okay? Let me show you a little bit different example here. Let's look over at some forex here, okay? And let's look at these right here. Yeah, let's look at these here. So, you know, what if I was to buy, for example, like this one right here for about 18 bucks? Notice these are only 4 ticks wide, these strikes, right? So if I was to buy this for about 18, 19, 20 bucks, and the market moved 4 ticks, and then moved another 4 ticks, and then moved another 4 ticks. So the market moves up 12 ticks. Well, I bought it for 20, right? So now if we go down 1, 2, 3 strikes, I could sell it back for 48. So I could a little more than double my money right there. You see that? Okay. But if I'm buying it for 19 or 20 bucks and I'm trying to hold it all the way to expiration, well, the market could go up, but what if it doesn't keep going up? Okay, like in this example here. You know, what if I had some kind of indication, oh, the market's going up? And what if the market came up to like, right here, let's say the market came up to like here. So I was right. The market did go up. I was right in my direction. My strategy system was correct. But then it kind of hesitates and it comes back down. Well, what is this binary going to be worth at expiration if the market came up and then came down at expiration? It'll be worth 0, right? Because at expiration, it did not stay above here. Okay. But what if I had a, indication on my strategy or system that the market was going to go up? I just don't know if it's going to go all the way up there. But when it goes from here to here, what's happening to the value of my binary? So again, if I bought it like right in here at 20 bucks, I don't know if it's going to keep going and going and stay up there. But what if I bought it for, 15 or 20 bucks and it just went up, 4, 8, 10, 12, and I got out of it at 40 or 50, and I doubled my money. I made 100% return on my money. Should I say, well, that's not exciting. Why risk 25 to make 25? Like, why are you trading to make 25 bucks? That's not exciting. I want to go down here and risk 8 and I want to make 100 or have it expire at 100. Okay. How often is that going to happen just from a probability standpoint? What does this pricing tell you the probability of that happening is? About 4%, right? Even if it was twice that and it was 10%, that means you're only going to be profitable 1 out of 10 trades. You're like, well, yeah, but I made 90 bucks on that trade. Okay, and what about the 8 or 10 that you lost 9 times? Did you get anywhere, or are you maybe break even? Then you got to pay fees, and then you had to trade 10 times, and you're at break even and probably negative after fees. Does that really make any sense as a trading strategy, just in and of itself? Not really, right? But if you had something on your chart telling you that, hey, the market's going to go that direction, and it might go that direction with some strength and make a quick move. It might not go all the way up there, but it's going to make a quick move. and you can get something for $16 or $22, take advantage of that quick move and get out at 40 or 50 and double your money. Don't be so wrapped up in, I don't want to trade for 20 or 25 bucks. That's not the point. The point is, what was your return? You risked 20 to make 20 or 30. That's 100% return. But so many people get caught up in being greedy. Well, I want to make that bigger amount. I want to get that home run, right? And what happens? You were right. The market came up, and then it came back down, and it was zero. And what are you thinking right there? Man, I sure wish I would have got out when I doubled my money at, made 20 or 30 bucks. And then take the next one and make 20 or 30 bucks. And take the next one and make 20 or 30 bucks potentially, right? But no, you're holding out, waiting for that big payoff, and you're disappointed. Does that make sense where I'm going with that? But also think about it like this. Once your account builds, the key to trading, okay, the key to successful trading is not about taking tons and tons and tons of trades every day. Or some people think, oh, as I build up, I take like 3 or 4 trades a day right now. But after I build my account up, I'm going to take like 10 trades a day. That's not the right answer. The right answer is you have a good, solid strategy or system, and you've learned to have a good, risk reward, like 1-to-1, like risking 20 to make 20. And you've got a system with a high probability, where you're being profitable on, 70 or 80% of your trades, right? And you're only taking the good ones. And even after you've doubled or tripled your account, you're still only taking a few good ones a day. You're not taking more trades. But what are you doing? You're taking more contracts, right? Because I can risk 20 and have it move just 4 ticks, 8 ticks, just 8 ticks, I can double my money. So I make 20 bucks. Well, what if I'm doing all of a sudden, so I'm making 20 bucks and maybe I'm doing three winning trades a day. So I'm making 60 bucks a day. Yeah, maybe that's not real exciting, but that's 300 a week. That's 1,200 a month. Maybe that doubled your account. And then the next month, you're doing the same thing, but you're doing 2 contracts at a time. So now it's $40 each time, times 3 trades a day. And that's $120. That's $500 a week. That's $2,000 a month. Maybe you've tripled your account now. Maybe you're doing 3 or 4 contracts. Don't be so concerned about the dollar amount. Don't look at it to say that's not exciting to risk 20 to make 20. It's 100%. What happens if you're trading 5 contracts? Well, then every trade that expires in the money is $100, and then another $100, and then another $100. What if you're doing 10 contracts? Does that make sense? It's not about throwing your money away $10 at a time worthless, right? Or it's not about, risking 87 to make 12. Okay? It's about good risk reward. And there's some great way to trade these in the money, by the way. That's another webinar. But that is a big key that some people will realize, hey, maybe I don't need to take these that are so far out here. Maybe I need to take some of these, okay? Because these don't move real quick in value, right? So maybe I need to take some of these. But then they still try to hold them to expiration without having a reason to. Does that make sense? Okay? As opposed to looking at what is the probability of, okay, I might get a move, but how do I know it's going to move up there and stay up there? Okay? And so holding out, trying to get more, being greedy can end up costing you. And then when that thing expires worth 0, you look back and say, man, I sure wish I had that 20 bucks. I sure wish I had that 100% return. Does that make sense? Can you see where I'm going with that? And I would imagine that some of you have been there, done that, right? I was like, yeah, there's so many times I wish I had just taken it and gone. Show of hands, who's ever done that? You know you have, we all have, right? And, you know, so, and something that, you know, we look for, you know, over here at Apex, we have, you know, a bunch of different proprietary systems and indicators. And, you know, what we like to look for is what we call, you know, kinks in the market. Okay. And what I call those is, think about a water hose. Okay. What happens when you turn on a water hose full blast and then you kink it? Well, it stops, right? And what happens? The pressure builds, you see the hose, you know, building, right? And then when you let it go, what does it do? It bursts out and it shoots out, right? But does it stay bursting out all the time? Or does it burst out and then just go back to a steady stream? Okay. So, you know, what we like to talk about, what we like to focus on is finding those kinks in the market. Like if I want to trade these out of the money binaries, well, I need for the market to move in my direction, but I don't know that it's going to stay going in my direction, right? But what I'd like for it to do is make at least a quick move in my direction for me to, you know, kind of double my money, right? And some of you that have been on some of the other webinars with us when I've talked about this is, you know, and here's a perfect example of one of the things that we do is we look for chop in the market, okay, especially around levels where you see the market kind of chopping around. So imagine this is the market being kinked, okay? The market's kinked and it's in there, it's a fight, it's building volume, you know, it's building contracts, ready for a breakout. It's kinked up, building pressure, waiting to break out. Well, but how do you know which way it's going to break out, right? Well, one of the proprietary tools that we use is what we call right down here, VAD, our VAD indicator. It's an Apex proprietary indicator, and it measures the volume of a trend, okay? And you can kind of notice here, like when the market was pushing up, you know, we've got these blue bars matching it. Now, this is not the volume of each bar. This is an accumulation of trend volume, okay? Then you see it pushes up a little more here on less volume. Then it pushes down and you see that level of volume. But when we're in here in this chop box, you see right here, the market pushed down and kind of that was the accumulated volume. Here it tried to make another push down and even less accumulated volume. You see the difference of where the volume went? And here we had a down closed bar, very little volume. And then look here as the market comes down and starts to break out of this chop box area. Well, the volume starts to build, but it never breaks the previous volumes of the downward pushes inside the box. So it's breaking this chop area, it's breaking this kink with no momentum and with no pressure. So if I'm going to trade that out of the money binary that's way up there, even though the chart may look like that the market is going up or down, okay? But let's look at this again. So I bought this way up here. Is there any reason I would want to buy that way up there if the market looked like it was going that way on weakness? That wouldn't make a lot of sense, would it? Right? And when I see the market chopping and fighting here, but then it starts to break out of that area on weakness, I don't want to take it. And look, I'm glad I didn't. Because see, it kind of came out of the area, and I might have been looking to sell right here and go down. It was a fake break. There was no strength in it. But look what happens here when the market starts coming back up. And then what happens right here when the market breaks the top of this fight chop area? What's happening down here? Remember here in this box, see the pushes up in volume? Just a little bit of blue, a little bit of blue, a little bit of blue. What happens here? Building, 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 bam. See the line I drew there? Can you clearly see how the volume and momentum is building and pushing, and it's higher volume and momentum than anywhere before here in the fight area? And what happens when it breaks out of that kink box area with all this extra building volume, it takes off. That's what I'm wanting to trade, is that right there. I'm wanting to trade strength and momentum, not weakness. Make sense? Is that pretty clear what I'm showing you here? Okay. Now, I don't know that this momentum, I don't know how far that's going to go, right? I don't know that it's going to keep going all the way up there. But if I see it breaking out of this kink with momentum, I'm expecting a burst. And what do I want to do with that burst? I want to look to try to utilize an out of the money binary to double my money and then get out, right? Because I don't know that it will keep going. All right. Does that make sense? Any questions on that? I hope you can see why we only choose, to, with our, strategies and systems at Apex Investing, we only choose to trade these out of the money binaries when there's a particular reason to do it. Okay? And that is the reason that we choose, is when we see those kinks in the market, as it were, knowing that those could be areas where the pressure is going to build, and then, looking for the market to break out on strength. And we utilize our proprietary indicators to show us that strength and that volume and that momentum. Okay? And we want to take advantage of those moves with the out of the money binaries and just kind of get in and get out. All right? And not be holding on to them, just waiting. Okay? I mean, let me just kind of give you an example here. I squished this chart in a little bit. I hope you can kind of see this, but what do you kind of see, like, right in here? Can you see like these up and down closed bars all in there? Okay, it's a little bit of kink in the market and then a little bit of a break. That doesn't look like a big move right there, but these are 10 tick bars. That's 10, 20, 30, 40. Okay. What do we have like up in here? All right, you see some congestion in there, the little kink, see it? And then what happens? It shoots down. Can you see it right there? The up and down and up and down, and the wicks, the congestion, the kink in the hose. See that square there? Just like I was drawing kind of the boxes right here. Okay? Like you see it right there. Okay? I mean, look over here. See this congestion down here? Kink, and then a break. What do we have right here? Kink and a break. Okay, so that's how we're kind of looking at the market when, here's another one right here. See it? Little congestion and a zip up. Okay, here's some bigger congestion and a zip up. See this congestion here and a zip down. Because you don't need a huge zip if you don't always need a huge zip if you're not looking to hold it till expiration. Okay, so when we identify these areas of congestion, here's another larger one there, and then, zip out of there. We identify these areas of congestion, and then we look for the volume and strength to confirm the breakout and look at our options. Okay, we don't just randomly take an out of the money binary because we like the low risk and the high potential reward, because it's pointless to take them without a reason. That makes sense? Any questions on that? Okay. So I hope that helps you understand that there is a time and place for out of the money binaries, and there are, strategies that you want to use for them. And I hope you see that there's a time and place where they may not be your best option, and that you never want to take them just based on price or risk. All right, guys. All right, well, I appreciate you joining us today, and feel free to hit us up over at apexinvesting.com if you have any questions. And we've got some free stuff, some free deviation levels over there. We've got some free binary and spread training courses that we offer over there, and you can check out some of these other strategies and systems as well. And make sure to check out the nadex.com website for the webinar archives if you want to rewatch this webinar or any webinars we've done in the past. Okay, and definitely make sure to hop on to the upcoming webinar schedule and get signed up for any upcoming webinars. I appreciate your time today, and we will see you next time. Thank you very much. Have a great day.